Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. A couple things to keep in mind as we get going. One is that no one trade is guaranteed to profit. Each and every trade that you take clearly has some risk involved. But the other side of the coin is each and every trade you take clearly has good potential profits as well. So the idea is, from an educational standpoint, as we go through the webinars, to come up with some ideas that hopefully will improve upon the positive returns and hopefully decrease the negative returns. What we go over, keep in mind, is not meant to be financial advisement, but certainly could be helpful with improving upon your strategies and your concepts as you move forward with your trading. As long as we're mentioning risk when it comes to trading, one thing we could talk about is that if you use our web trader platform or our AvaTrade Go mobile app, there's a unique feature that you probably haven't seen at any other broker if you've done any trading other places, a feature called Ava Protect, which is available through our app and our web trader platform, which allows you to protect against any and all losses for defined periods of time for a small premium cost. So that could be part of your risk management plan, along with using stop loss and some of the more traditional methods of risk management. Just something to keep in mind, and we'll take a look at that feature maybe if we have a chance. So real quick before we get on the live charts, what is fundamental analysis? In general, it's looking at what's happening economically around the world. Yeah, that's the chat box, David. You found it. And so fundamental analysis is important to do if you're trying to get an idea of what is the sentiment out there, meaning which way is the wind blowing, so to speak, in terms of momentum on the markets. And the fundamental analysis really helps you in that regard, so that you go into a trade understanding what direction do you prefer to find a good entry point. You know, you might do the technical analysis and say, wow, this is a really good entry point. It's right above a support level or right below a resistance level, or whatever the technical strategy is you're using on the candlestick charts. But if you don't understand what's happening fundamentally, even the best entry points can really go wrong. So, you know, if you just saw a headline, and I'm just making this up, if you just saw a headline that came out that says, you know, global oil supply to increase by 50% because of increased production. If that headline came out, you know, the effect of that type of news, that there's going to be a huge increase in oil supply, would lend to it the fundamental wins to drive the price down typically, right? So it wouldn't matter how nice of a support level the price was sitting on that you thought you should buy from, technically speaking, in terms of the technical analysis. If that type of headline came out, the technical analysis could be blown out the window, and boom, the support level could break, and down plunges oil prices with that type of headline. And so that's just an example of how fundamental news could come out at any moment and mess up the technicals in terms of what you thought was going to happen. And so that's the point of this webinar, is to understand how can we use the fundamental news along with our technical analysis to maybe have a stronger understanding of what could potentially happen moving forward. And so The types of fundamental analysis you can do would be looking at regular economic events. And we'll take a look at some that have already come out today, that will be coming out later today and tomorrow. These are scheduled economic announcements that we know exactly what they'll be and when they'll be, and which instruments it most likely will affect, etc. That's one type of fundamental news, a bit easier to understand in terms of scope and timing. The other type of fundamental news is what we might call extraordinary economic events. And that was kind of the made up headline that I just gave you. If a headline came out about a huge change in oil supply, or who knows what it could be. In the past, these headlines that came out unexpectedly were about Brexit or about the COVID pandemic, etc. And we just don't know when another headline might hit that could swing the markets. And so within your risk management strategy, within your trade entry strategy as well, you can take into account the fact that most likely there will eventually be an extraordinary type headline that you didn't expect that will come. There are ways to take advantage of those headlines without even knowing what they'll be or when they'll be. And then also paying attention to the regular economic data as well, so that you have a good understanding fundamentally of what's happening and how to protect against unknown fundamental news, and also even take advantage of unknown fundamental news with pending orders mostly. Okay, so as we go along, if you have any questions, please ask, type in the chat box, and if you have anything you want to share with anyone, feel free to give some input as well. Okay, so this is our main website as it looks for most of you around the world. If we want to look at what are the big headlines that have come out, let's figure out the sentiment right now. And it's kind of a weird sentiment. And I'll explain what I mean in a moment as we go through the headlines. The first headline, Eurozone factory growth input cost rose at record pace in June. Okay, we're just now getting into July, and it looks like June was like a record growth month for factories. That sounds on the surface to be very good news. Wow, factory growth is up at record level pace. And so that means the economies are opening up, they're coming out of the shutdowns, etc. The problem with that is, that type of growth and cost increase, not only is it inflationary, but it could be viewed as hyperinflationary, meaning too much inflation, growth too fast in terms of prices and cost. And so this is the balancing act that central banks around the world are trying to perform right now, is, lend enough economic stimulus, low interest rates, bond buying programs, etc., to get the economies growing again as we come out of this pandemic, hopefully. But then the other side of that is, boy, if the central banks and governments provide too much support, then maybe we have hyperinflation rather than a healthy inflation, and that can cause problems as well. And so this is what we're looking at, is record factory growth and cost increase occurring in the Eurozone. We look at the UK. UK factories ride demand boom. Price pressures hit record for the PMI. PMI stands for Purchasing Managers Index. It shows the cost that these factories are having to buy products, to buy materials for making products. And so, as those costs go up, they obviously pass that on to the consumer. So these PMI numbers, as they call them, out of the Eurozone, out of the UK, out of the US, etc., are key indicators of inflation. And so if the Purchasing Managers Index is showing greater than expected cost, well, then you can read into the tea leaves that that's greater inflation than expected. And again, inflation is good. Too much inflation is viewed as not good. Okay, if inflation's too low or too high, it's not viewed as good. And right now, there's fears that this huge demand boom that's occurring coming out of the COVID crisis is creating too rapid of an increase in prices? Yeah, listen, Andreas, that's a good question. In general, if prices are rising faster than expected, meaning there's hyperinflation, then that tends to mean the currency is weaker, right? Hyperinflation means, like, for example, in the US, home prices rose at the fastest pace in 15 years. We looked at it in the last webinar. What does that mean? That means every $1 is worth less. Not worthless, but worth less, meaning you need more of them to buy the same thing. To buy the same house, now you need X% more dollars. Or in the UK, to buy the same products, you need more pounds if the prices are rising rapidly. So that means any £1 is worth less. So yes, it does mean in general a weakening of the currency when there's hyperinflation. And that's the problem with hyperinflation. If your paycheck isn't rising with the rate of inflation, all of a sudden your purchasing power drops, and that's bad for the economy. And so you want inflation. You don't want inflation to outpace wage increase, though. You know, ideally, you'd like healthy amount of inflation and wages going up at or above it, the rate of inflation, so that your purchasing power increases. And so the fear now is inflation too high? Are the currencies weakening? And what would you do if you thought the pound, if you're in the UK and you thought the pound was going to weaken, lose purchasing power? What's the safe haven you might buy into if you had inflationary fears? What are some examples of safe havens that fundamentally people might be interested in right now if they're worried about hyperinflation? The first thing that comes to mind is gold, right? Margaret says gold. So you can understand why moving now through the rest of the year, there might be some attraction to buying gold. Maybe there's going to be some bullish pressure on gold prices as a safe haven against inflation. And for that matter, cryptocurrencies have dropped a ton recently, and cryptocurrencies for the past year or so have mimicked the movement of gold quite a bit. You know, gold had a huge drop down recently, and so did the cryptocurrencies for different reasons, but they dropped kind of at the same time. And cryptocurrencies were going up and hitting record highs while gold was. So why might cryptocurrencies be viewed similar to gold? Because they're nationless. They're decentralized like gold, right? Gold's not tied to any one country's economic announcements, and neither are cryptocurrencies, right? But you could start to think about other instruments like oil, like silver, other instruments as well that aren't traditional safe havens. But boy, if demand is going up, if production is going through the roof in terms of factory production, and prices are rising and currencies are weakening, shouldn't that help drive something like crude oil up? And so crude oil has gone up, if you haven't noticed. You know, West Texas Intermediate crude, I think, broke above 70. It's pulled back some, but there have been some talks that it could hit 100 a barrel with hyperinflation. There's no guarantee that's going to happen, but these are the fundamentals behind what could happen, right? And it's important to understand what's driving these movements. Largely, it's not the technical analysis, it's the fundamental news, both microeconomic, meaning one country's jobs announcements maybe, and macroeconomic, global inflationary fears, that sort of thing. Okay, here's the next headline. Asia factories see momentum weaken on rising costs. So it's like a progression. Who came out of the COVID crisis the quickest? Well, it was the Asian countries, specifically China, right? They had a handle on it the quickest. Some say because they knew about it and didn't share the information, and it took precautions that the rest of the world couldn't. But in any event, Asia, China in particular, came out of the COVID crisis the quickest. Their factories opened up the soonest. Their prices rose the soonest. And look at, in the progression, what's now happening in China or Asia. Factories see momentum weaken because prices got too high. And now what's starting to happen in the UK, the EU, the US? Booming factory production, and now fears about prices being too high. So that what's next in this step is maybe factory momentum weakening other places like we're seeing in Asia. This is the fears of inflation. Prices get too high, all of a sudden demand drops, and that boom reverses. Okay, so we're seeing signs of a potential problem globally with inflation, and we see it creeping in the Asia factories already. Eurozone recovery faces risks from virus mutations. That's another thing to keep in mind. There could be a sell-off on the markets real quick if all of a sudden this virus mutates and it's deemed that the vaccines aren't working or something against the mutation. Right now, most of the vaccines out there, from what I'm hearing, are doing very well against the most recent mutations. So luckily, that's not a major issue yet, but there are risks, obviously, from possible mutations. That's just something to keep in mind. It's really not something that's moving the markets right now. This is the other type of economic data we talked about, the stuff that's scheduled. If we look at the data that already came out, here's German PMI. Remember we talked about that? Purchasing Managers Index, higher than expected. Already expected high in the 60s and came in a little above. The UK numbers came in a little below expectation, but still at record highs. Okay, so the inflation is there. We look at what's coming later today, job numbers, jobless numbers out of the US, PMI data out of the US, manufacturing PMI, manufacturing employment numbers, all kinds of big data coming, and the PMI numbers will be looked at the closest, I think, for signs of, is inflation too high? And so if these PMI numbers come in above expectation, boy, you could see some fear really hit the markets, and maybe gold gain some momentum as well. Okay, so very important announcements coming, and not to mention that also Bailey is speaking for the Bank of England later today. Whatever their monetary policy statements are, and that if they come out in that speech, that could really move the strength of the Great Britain pound. So you could prepare for potential large swings on the pound today, as well as the USD, and as well as the major commodities like gold, oil, etc. Okay, and the major indices. Andres, we're kind of forecasting now, right? You're asking how can you trade without forecast information? The forecasts are here, by the way. You see here, forecast, what's expected. But the key is not what's expected, but what are the actual numbers compared to the expectation? And that's what we see up here, is when the numbers come in greater or worse than expected, that's what really moves the market. Okay, so real quick, if you log in, we're about to get on the charts. I think we understand the fundamental situation right now. The volatility index has been up and then down today. The markets seem a bit choppy, and it looks like there's some fear building potentially on the markets. You know, if we look here, we can see that right now volatility is flat. But if you notice what happened today, volatility was way down. The VIX volatility index was down like 5%, 7%, and now it's come up to even. So even though volatility looks flat, it's 0.76% change on the day. It actually, over the past few hours, volatility has risen quite a bit. I'd say 6-7%. And that could continue leading into the US Open today. Something to keep in mind. All right, so if you want to use our award-winning mobile app, AvaTrade Go, which has that Ava Protect feature and other great risk management features on it to help you with your trading, You can download it from our website here, AvaTrade Go. You see it here. You see Ava Protect is available on gold, silver, FX pairings. For a small cost, you can protect your trades for defined time periods. And also, if you use the take profit and stop loss features, it calculates and tells you how much you're risking to those marks or how much you'll make to those marks, okay, based on your trade size. So you're fully informed about risk as much as can be from this app before you buy or sell. You know what you're getting yourself into in terms of potential profit, potential loss to your take profit, stop loss marks, etc. Okay, so very nice tools within our app, and you'll see those same tools in our web trader platform if you log in from our main website here. Okay, you log in, you'll be on this platform here. Okay, very user-friendly platform, has great features in the order window, great search tools, etc. I would recommend that you check it out. I think you'll like the platform quite a bit. It even has some advanced tools. If you click here for fundamental and technical analysis, the Trading Central tool, you can get free signals with technical analysis done for you for cryptocurrencies, FX, etc. You also, in that feature in Trading Central, can get some fundamental news under Market Buzz. You just click on the instrument name that you're interested in, and it brings up articles for you. The articles have been found for you, and you can read what's the latest news that's come out on Amazon or JP Morgan or Google, etc. Andres, yes, of course, you can trade on instruments that don't have forecasts. You might do a little more digging like we did with articles and searches to gain a little bit more fundamental understanding what's happening with it, just like we simulated just now. Okay, so let's go ahead on the MT4 platform. We'll take a look at what's happening. This is the US Tech 100. We see the pullback. You can see the fear in the market with the technicals. And what I mean is, look at these 1 hour candles. For the last 3 hours, down, 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 down with the US Tech 100. There's definitely some fear hitting the market right now. What we also see technically is this just pulled back to a support level. You see this line I drew from the last webinar. We talked about shorting the NASDAQ in Tuesday's session. You can go back and watch Tuesday's session. It's on our YouTube channel. And you'll see we simulated shorting the NASDAQ. And boy, down it came from the highs now. And here's the support level, which was old resistance. Resistance became support, support, support. And here it is on the support level now. So if you're a purely technical trader, you might buy right now. Right? You might buy on the NASDAQ, the Tech 100 here, because it's on a support level and you don't have to risk much to buy off this support. So if that's the case, you say, all right, let me buy them. And then I put my stop loss just below the support. I don't have to risk much. Okay, I'm just below this support level, and I can put my take profit maybe halfway back up or 3/4 of the way back up from where it was just a couple hours ago. Okay, so potential profit about double what I'm risking. I don't have to break any resistance levels to reach my take profit. In order to lose, it has to break this support level that it's on top of right now. That's a purely technical move. Why might I not make this trade if I'm trading fundamentally? What did we just look at? Inflation fears creeping in today, right? What happens to stocks when inflation fears kick in? They tend to drop, right? Which is why for the last 3 hours, the US 100 is dropping. So you get yourself in a conundrum kind of when you start looking at technicals and fundamentals. And the technicals say, okay, it's on a support level, buy. The fundamentals say there's fear hitting the market, maybe sell, right? And so it doesn't mean you can't listen to both. Right now I made a technical trade. We simulated buying off of a support level with minimal risk and better potential profit. The flip side of that is I can prepare for this support level to break. because the fundamentals are telling me there could be a sell-off, as Matthew, you're alluding to, that we're due for a correction on the market. And I might agree with you, Matthew. So what kind of pending order could we put that if this support level that we drew here breaks, if this buy position loses, the support level breaks, and it confirms a strong downtrend, what kind of pending order would sell from just below this support level? I'll give you a hint. It's not a sell limit. Selling from a lower point is a sell stop pending order. So this is an example of when you might want to sell from a lower point, meaning the traditional way of selling is, sell high, right? Buy low. Why would you program to sell from a lower point? This is a good example. You're waiting for a support level to break to confirm a strong downtrend. Okay. So at the same time, I bought with the technical strategy of hoping it bounces off the support level, which I understand why it might not. Then maybe I prepare a sell stop for the potential that it might break the support level. And so maybe from 14,490 or something like that, I might anticipate selling. And then my stop loss would be back above that at 14,000, maybe 540, 50 points up. And my take profit could be somewhere further down. This might be a support level down here I might be looking at, which would be at 14,000, I'd say 425 for a take profit. Okay, so there's a pending order. All right, so if this breaks the support level, hits my stop loss here, and then hits a lower price down here, then it triggers the sell. Otherwise, we're in on a market buy, hoping the technicals are right, that it'll bounce off that support. And many times, both can be right, meaning because that support level's there, even with all the downward momentum, you'll get a temporary bounce many times. And that could get you a profit working against the fundamental news as it bounces off that support level temporarily. You might be quicker to take profit in that direction, right? Maybe instead of saying I want to take profit up here, I say I would prefer to take profit a bit closer because I don't think it'll continue to go against the fundamental news right now, maybe. And in the downward direction, if that's with the fear, with the potential correction that could come on the markets, then maybe you're more patient with your take profit, which it's a further distance to the take profit if it breaks the support. And you say, where's the support level? It's right here. This old resistance here, you see the momentum it took to break that resistance level. Look at the size of this candle. That's what we call a breakthrough candle. It took big news, big momentum to break this resistance right here. Okay, so once it broke through, then this price level becomes support. So if this does break this support up here and plunge, this could be the first spot where it finds support on this old resistance level. And so that's why taking profit just before that price level could make sense. Matthew, for sure, the major stocks, and not just US indices, but globally, indices around the world could exhibit the same momentum under these economic forces. Okay, so because it's such a global market anymore, if you see a sell-off on US indices, not only might the US 500, the Dow Jones as well, the US 30, not only might those mimic the tech 100, the NASDAQ movement, but you might also notice that, the CAC, the DAX, the Nikkei, etc., might also mimic and get in on that momentum move. Okay? So we've got a setup here then, a 1-2 type move. Going after a potential quick profit on a bounce, while all the while being prepared because we understand the fundamental situation that this support level could break triggering our sell stop to be in the direction that maybe we even believe in more, fundamentally speaking, that there's fear potentially hitting the markets. All right. But not giving up on the fact that, hey, just 3 hours ago, it was at an all-time high up here. And so maybe we can get a bounce and take a profit off this support level. That's the thinking here. Okay. All right. So let's look at some other instruments like crude oil. Look at crude oil going through the roof. Didn't we just say, as we were looking at the fundamental situation, that there's huge reason for oil to go up, right? Why? Because there's inflationary fears. Why would oil go up if there's inflationary fears? Well, because the currencies are weakening, right? So if people expect currencies to weaken, then it makes sense to buy into something whose price goes up when currencies weaken, which is crude oil. All right, so not unexpected that crude oil just spiked to 74.70. Okay, and you know, you see I have a pending order waiting on crude oil from a week or so back at 76. No, wait, 75. It's almost there. It's almost to 75. It got to 74.80 or so. If we go to the one-day candles, we see here's the pending order, just waiting to trigger at 75 to sell. So we clearly anticipated prior to today's session that oil was going to be bullish. Why else did we prepare a pending order up at 75, right? The question is, why sell then? Why would you sell if oil's bullish and is going to hit maybe 75 today on inflation fears? Why sell? And the answer is, look at the 1 week candles, right? Look back on the 1 week candles over here. This is back 3 years. We're talking October 2018, August 2018. Look at the resistance on the 1 week candles. Resistance down, resistance, and a huge drop. So this is a major resistance level, technically speaking. And remember, a lot of traders trade technically. So there's a huge rush of people who will probably sell on oil as it hits this resistance level around 75. Now, I might drag my stop loss a little bit higher than that. Okay, maybe I put my stop loss up here so it's clear of these wicks on this resistance level. And if it hits 75, you could see a potential pullback on crude oil. Now, it might be temporary, right? And so the temporary pullback is against the fundamental news of inflation. So you wouldn't necessarily put your take profit way down here at 58 on crude oil. So the take profit is maybe only double the distance to my stop loss. So it's a potential profit of about double or triple what I'm risking. So it's just a planned move that we understood the fundamentals was driving crude oil up. The economies are opening up. There's huge demand from factories. Production is way up. PMI numbers are up. This all drives oil demand through the roof, right? As the economies and factories are opening up. So it makes sense. Oil's rising. It also makes sense at some point there could be a pullback, and this could be a spot, technically speaking, that there's a pullback. All the while, you could have been buying on oil since this morning. Look at the 5-minute candles. You should have, I should say, even been buying on crude oil, understanding that the economies are opening up, PMI numbers are through the roof, the fundamentals are buy on oil, right? And there it goes up on the 15-minute candles we're looking at right now. Very easy to do, even within since we opened this webinar, and I said oil probably should go up. Had you bought on oil, you're up, right? Just in the last 45 minutes. So it'll be interesting to see when this hits 75, 75 and a half, if we see a strong pullback. Very easily could. Obviously no guarantees. Oh, there's my entry price. It's almost there. Almost to my entry. We'll see if it hits before potential pullback or if there's a pullback after it hits. Be interesting to see. All right, so if we look at US 500, we see the drop. We see the fear hitting the market. By the way, the US dollar tends to strengthen when there's fear on the market. So the fear is about inflation. you see a sell-off on stocks. Well, what do people buy back when they sell their stocks? They buy back the US dollar. So the fear of a weakening US dollar creates a sell-off in stocks, which then strengthens the US dollar as the stocks drop. So you could actually see a strengthening of the USD today against the euro, against some other currency pairings as well. So very interesting the way this ebb and flow of different instruments strengthening and weakening can go. So that might help drive a pullback in crude oil as well, if fear really starts to hit today. If we look at Bitcoin, still dropping. Okay, it's reached a weekly low here just today, just a little while ago. And the question is, where might it find some support? We do see a support level here around 32 and a half. But boy, China put some pressure fundamentally on Bitcoin and other cryptocurrencies, which triggered this big sell-off recently in the cryptocurrencies. They talked about banning mining in China, telling their banks maybe to not do business with any crypto transactions anymore. And that really put some fear in the market, and down came the crypto market. So there's a bit of fear still on the crypto market. So you might find your spots, if you think there's still bearish pressure on the cryptos, you might find spots if the cryptos spike up to potentially sell from high points rather than buying from low points on the cryptos right now, because they just seem to keep breaking support levels again and again after some sustained pullbacks up, some bounces up, then we see further dropping. And if we look at one-day candles, I can show you what I mean. You see the lines I drew Tuesday. Look at this huge downtrend in the crypto market on the one-day candles, and what we see is a huge drop and then a bounce. Then it stabilizes, and then another drop, and then a bounce, and then a drop, and then a bounce, and a drop, and the latest bounce here on the one-day candles, and another large drop. Okay, so clearly a bear market has formed as the 200-day moving average and the 50-day moving average, when they cross each other the way that they have recently, it's technically a bear market. And that's what happened with the cryptos. So currently, a lot of traders are looking for high points fundamentally to sell on cryptos after they're bouncing. But, some things could change as well. And yeah, Matthew, there was an exchange in South Africa that all of a sudden billions in crypto coins just disappeared overnight. And so some sort of hacking and robbery of that exchange, which is creating some fears, and specifically in South Africa. So I agree, there probably could be some new regulations in South Africa coming as well. So this is the benefit of, by the way, of trading on our platform. You don't have to buy coins and sit on them and wait for them to rise. You don't have to own the coins at all. You can just speculate that prices will go up or down and do short-term trading like we do with our CFD style on the cryptos. You don't have that exposure of putting your money into an exchange that, like happened in South Africa, kind of disappears overnight. You don't have that risk. You can just short the market if you think a story like that will cause prices to drop. Then by all means, short the market. You don't have the risk of someone stealing your coins, so to speak, when you're trading CFDs. So very interesting. If you see more regulatory rules coming in, the UK has now kind of banned crypto trading with the regulations. And so a lot of reasons for bearish pressure on cryptos right now. And so makes it simple on our platform to decide which way you might prefer to trade, right? And so if you're looking at small candles, like 15-minute candles, you see the support levels breaking. Support level here, broken. This is Bitcoin. Another support level formed here, broken. Becomes resistance here, right? Support level broken, pulls back up, resistance, drops again. So if this pulls back up to this old support, which should be resistance now, maybe you have a pending order